Welcome back to Breakfast. Australian companies appear to be doing it tough, with the latest MYOB survey showing their revenues falling dramatically. In contrast, back here, Kiwi firms are seeing modest growth. But difficulties for our biggest trading partner is not a good sign for us. To explain more, I'm joined by Julian Smith from MYOB. Good morning to you, Julian.
Good morning.
How dramatic a fall are we talking about in their revenues?
Pretty significant. So we actually survey businesses on both sides of the Tasman. We have 1 million clients at MYOB and we're looking at revenue performance and economic confidence. So right across all of those measures, New Zealand businesses are consistently outperforming their Australian counterparts.
But we do still have a mining boom in Australia, so exactly which sectors are doing it so tough?
It's really the eastern seaboard. So we've seen in the last 2 quarters, 2 consecutive quarters of revenue declines in the Australian seaboard. In contrast to New Zealand, say in Auckland, we've had 2 consecutive quarters of growth. So it's impacting those key sectors like construction and trade, places where Kiwis often find work. Retail and hospitality also doing it tough. We're also seeing just some pullback, just a modest pullback in manufacturing in Australia as well.
If it is in the sectors where Kiwis typically find work, could we see that impact the flow of migrants across the Tasman?
Look, I think we might, and I think if you're looking to move across to Australia, maybe in search of a better job and higher wages, just think quite carefully about that. You know, the jobs that you might have sought or got 6 months ago are not as easy to find today, and the grass is not always greener on the other side of the fence.
But obviously we can't just cheer that maybe fewer migrants might leave. What about exporters? Because you can't escape the fact Australia is still our biggest market.
Absolutely. You know, we always have this trans-Tasman rivalry with Australia, and I think in this instance it's best kept on the sporting field. Australia is our largest trading partner, our largest export market, and also our largest tourism market. So any time we see speed wobbles happen in Australia, that will have a flow and impact in New Zealand. And so we really want to see the Australian economy start to find some confidence again. That may take some time, however.
What sort of indicators are there in the survey about how businesses might fare going forward?
Certainly revenue outlook in Australia has been pulled back, so New Zealand businesses are more confident about their 2012 and 2030 projections. The other indicator we see is the number of business births in Australia. It's pretty much halved in the last year. So we're seeing really a contraction of the economy there. And I think that's primarily because New Zealand businesses, we're pretty tough. We had 4 very difficult years. If you survive those, you've got good systems, good processes, you're pretty battle hardened. Aussie businesses, on the other hand, have been shielded somewhat by the mining sector and all of those government stimulus packages.
But they've also got their eye on political developments as well. They're not happy with government,
No, they're not. We're seeing, particularly within the MYOB Business Monitor, the lowest level of government satisfaction on record with the Gillard government. And that's predominantly been driven by this new carbon tax that's just been, introduced into Australia, and that's universally unpopular within the small business sector.
And expensive.
Absolutely. More red tape, more costs, definitely makes an unhappy business owner.
Well, thank you for your time this morning and explaining those results. That is Julian Smith from MYOB. And I think, Rawdon and Petra, one of the keys there is that you can't actually always cheer when you're doing better than Australia, when your fortunes rely on them to a large degree.